I'm buying these sell stops. Below these relative equal lows. We just dip down in there. This is that daily volume imbalance I said we would likely trade up into. And for about that, just a little bit inside that daily volume imbalance. No market replay. And I'll take you out to the daily chart so you can again see what we're looking at. So this low is intact still. Trading back up into Friday's big sell off, which I told you would be reasonable to see that. And I'm anticipating it trading up into this lower portion, just a small amount. And that'll pad me out for any potential short. I can afford to be a little bit more loose with it. So all I'm looking for is a run up, clear this high, trade into this, and then snag that and see what we get in terms of price action after that. Relative equal lows. There's what I was looking at. So that's a minor sell side. Left. Small little bullish fair value gap in here and a bullish inversion fair value gap. So I'll add to that. So you can see inversion. And as you know, this is being done on a dozen or more laptops. I'm able to talk about everything I'm doing on every single one of those, which is impressive even to me. I don't know where I'm getting the focus. So we have inversion fair value gap, bullish fair value gap, and a draw up in here. So this is going to be a very strong reaction. Watch how it pops up in here. It's going to get real animated and clear this high right there. Actually, I like it so much. Let's go 20 cars into that. It can wick a little bit outside this. That would be a little mohawk. Watch how sharply this reverses and climbs back outside of the upper half of this. And again, no market replay. Note where the body is. See that? Inside that inversion fair value gap. Now this candle has to do a lot of work to go higher and not lay a body below the previous candle's wick low. It's this right here. No body below that. This wick is showing its control over price. See how we didn't even touch it? So a body below that is problematic. I don't think they'll need the code for this sell side. So this candle needs to get busy going higher. Right on the queue. How does this guy do it? Can touch the high of the inversion fair value gap again. I'd prefer it that it doesn't. I want to see it run, take out that high here without touching the orange area again. So minor buy side is here. We'll do this with the stop, take some of that risk away, but just at the consequent encouragement of that wick. Now, why am I picking that wick? Because above that wick, coming back down in, if it's not going to come for the sell side, it's going to go for inefficiencies. If there isn't any inefficiency below the inversion fair value gap that I've noted, and the bullish fair value gap in blue, pardon me, then the next PD rate is this wick. So its consequent encroachment is a barrier or boundary for price action. No need for gimmicks. No looking at how many people bought or sold at a particular price level. It's just very simple. It's very visual, and it's flawless. It gives you every bit of the information you're looking for. And look at that. That's what I want. I want to see energetic run above that right there. So we want to see it trade up into that orange box area and pay me out a nice little reactionary run, reaching out to the target of where I thought that price would retrace up to. Before any meaningful short could be considered, it has to get up into that orange area first. And it doesn't necessarily mean I'm going to get short today. It just means that at least I'm padding myself out, starting the week out with something that's, pretty handsome. All right, since we did that, what I'm going to do is I'm going to see if I can. Let's go with sell 15, leave 5 on for a runner in the event that it goes a little bit deeper into the area there. So if we look at the consequent correction of that daily volume imbalance to the low, if we measure that, you can see 29,560 ish, something like that. So if I can get a ride to that, or at least higher than where I'm going to take the limit order off there, that would be fun. Now we don't want to see it go to a loss. We don't want to see this fill back in. We want to see it run up in there. Real close. Okay, now it's touched the low of that daily volume imbalance, which is what we wanted to see last night's, or was it last night or yesterday? I don't recall what time I posted that video on YouTube. A little bit more. Come to daddy. Come on. Come on. Don't you just hate it when it does that? It gets real close to your limit order and says, not yet. Not yet. Come on, get up here. Come on. Pop it up here. Let's go. A little bit of dog whistle action. Come on. There you go. Look at that. It's almost like I know what I'm doing. All right, so now what I'm going to do is I'm going to layer like that. So let me sell one right there. Oops, I'm sorry. I don't have the execution showing. Sorry. All right, and now above this, we can drop one there, and we'll stagger one right there. Now, I don't want to see it come back immediately for that volume of balance. I don't want to see that because if it's in a hurry to get back to that inefficiency, that's kind of a little less bullish. So getting back to consequent encroachment of that daily volume of balance may be a little overzealous on my part. So we'll see. I got 4 contracts on immediate rebalance on this wick. So let's see if we get any kind of discount sensitivity off of that to the upside, clear this candlestick's high. If it does, then I'm going to run the stop loss rate to the low of the daily volume imbalance. Good. Run up higher. It's cool. In this case, what I've done is I've taken a large portion off above the low of the daily volume imbalance. And if these limit orders can get filled by running the stop loss from here up to the low of the daily volume imbalance, that orange shaded area, what I've done is essentially locked in the final 2 contracts, assuming those get filled here, where no matter what, I have a chance to have 2 runners still with a stop loss that would get me out at the low of the daily volume imbalance. So that's not a bad target for being forced out of the final 2 contracts of a 20 lot. I would like to see it run here. It's already spent too many candles without going higher, so it needs to start running higher. Come on, bang it up here. Righty then. Whether it fills it or not, I told you I wanted to see it take this high out. And so since it did, even with these not getting filled yet, stop's been raised up to here. So it is what it is. No sense of giving back good money. There you go. One more partial's been taken. Again, no market replay. Come on, send it up here to daddy. Let's go. Come on, come on, come on. Get it up there. You touched the price. Come on, give it to me. Come on now. Come on. Come on. I'll take one off on that type of price action there. I wanted to see it. I'll take another one off. So now I have the limit and the stop. I'll take the limit off and the stop's on still. So I just want to see how far this thing will go. I don't want to put a finite closure to it just in case it does run away a little bit higher. You can see all the business here I gave you. See if we can get up to 560. 555 560 in that vicinity. I'll peel it off if I can get there. Or the stop. Stop stays and remains where it's at right now. So you see how the nested areas of two qualified areas for discount sensitivity, down close displacement, trading back above that, that gives us inversion fair value gap. And then we had the buy side and balance outside efficiency there. All right. I will take that. Thank you so much. I'm content with that. Very, very good, Michael. You are learning, son. You are learning. You are getting it. I think you're getting it. All right. So we got to a nice little level there. And I think that is going to suffice for this morning. So that way, you saw me give you that analysis last night, yesterday, whatever it was, um, talking about how we would likely see price draw back up into this daily volume imbalance. And when we have this type of criteria here, we can see how price can utilize that type of market structure without having to go inside candles and looking at orders and how many people bought and sold and all that business. Everything is represented in open, high, low, and close. And if you keep things as simple as that and have a model that you're looking for something that has high probability, you'll do fine. I hope you found it insightful. Until I talk to you next time, be safe.